Hey guys, what's up? Alec back with the daily stock market. And today what we're going to be talking about is the 10 best stocks that you can buy for under $30. And today we're not in the home studio, we're just on the phone. So let me know if you drastically like it better when we are in the home studio, or if you don't mind these kind of videos that I can pop out very quickly too if I need to update you guys on something. Now, what you'll see in the past 3 months here, we're up 38%. And you'll also see in the last month, we're up 8%, $1,800. We opened up a few different options for Coca-Cola last night. So if you guys want to see an option video after this one, hit the thumbs up button before the video even starts and comment below. And I'll actually do an options video for you guys next. You'll see we have a few different contracts. We have 3 different options. And as you can see in the bottom left, we have over 380 students now, and we were actually posting about this on my close friend story last night. So it says, for a long-term hold, I think Coke is a great buy right now. Also, even just for a swing trade, I think Coke's a good buy right now. In my opinion, I can buy now, swing it all the way up to 54 a share, which would be around a 10% growth in the short term, and more if you hold it for the long term. This is a very low risk play, so you can go a little bit heavier on this buy. And then I posted a few hours later at about midnight, so you see it when the market opens, that I was going to be doing an option play. And I outlined 3 of the best options on Coke that I think would make some money. So if you want to get on that wait list, go ahead and reach out to me on the Instagram DMs, and I'll add you to the wait list so you can actually see what I'm buying, what I'm selling, and get some ideas of what's going on in the market. And also, if you want more of a coaching program, I'm here for a second voice. So if you guys ever want to run your ideas past somebody who has a little bit more experience than you, like a second pair of eyes, that's what I'm here for. But enough talk. This video is actually about 10 of the best stocks under $30. So let's get right into the video. Okay, so the first one that we're going to be talking about is going to be ticker symbol AMC. And I posted this one on my close friend story too. And what you'll see is I said, this is a risky play, so I only added $50 into them. But I'm going to try to swing it all the way up to $4. But I'm going to try to swing it all the way up to $4.50. So right now it's basically at $3 a share. And if we swing trade it all the way up to $4.50, so that'd be about a 50% gain just to $4.50, about a 40 to 50% gain. And if we went all the way up to $6.60, that can easily be a 100% gain right there. And remember, in the past, this stock was even at $19 a share, $32 a share. Now, am I saying it can go that high again? I don't think so. But $4.50, which would be right here on a 5-year chart, is definitely realistic for the stock to be at again. Now, on the risk side, this one can go back down to about $2.12, which would be about a 10% loss. So that's why I'm treating this one as a little bit more of a speculative play, adding just a little bit of money into it, seeing where it goes, see if I can get that 50% gain on AMC. All right, so the next one's going to be BNGO, ticker symbol, and it's going to be Bionano Genomics. And what can we say about this one? What we'll see is it was up at $7.20 right when there was a lot of hype about this one. It ran all the way up to $7.20, and then it cooled off a little bit. And that was the time when I was buying it right around $5 a share. We were buying it in my private group as well. And then the next thing you know, it ran all the way up to $9.14. A lot of people already cashed out. I cashed out a little bit, but I also still held some on my other account. And my other account's more for long-term holds, and I think that this one's going to be a good play for a long-term hold. Even Cathie Wood herself says the genomic sector can be the next big thing in the stock market over the course of next 5 years. So you definitely want to look at this one for a long-term hold. Yeah, it has some great swing trade potential, but if you dig under the hood a little bit, you'll actually see that this is more than just a swing trade, and this whole genomic sector can be a great long-term money park. Okay, so the next one on the list is HUYA, and this is going to be a Chinese company. Cathie Wood, talking about her, she actually invested in this company on the ARK ETF, so it's definitely one that wants to be on your radar. And if you're into gaming or like live streaming at all, this is going to be the stock for you. You'll also see the company provides live streaming content for mobile, personal computers, and console games It offers content to other entertainment genres such as talent shows, anime, and outdoor activities. The company was founded in 2014 and the headquarters is in China. So this is one of those stocks you definitely want to do a deep dive on. Like, you would want to watch some interviews with the CEO and see what he's like. And you can see how slowly I have been buying this one in January. $50 here, $40 there, $20 here. So very slowly but surely. We're already up 13%, but I think that this one can be a great one for a long-term hold. Not just a swing trade or an options trade, which it can be good in that sense. But I think where this one's really going to be shining too is going to be a long-term hold. And if you need to diversify a little bit more into Chinese stocks or into gaming stocks, for example, $23 a share, this can be the stock for you. Okay, so the next one we're going to be talking about is ticker symbol MARA. And this is one that I actually bought today. So at its current price value, I think that it's actually a very fair deal. It's down 23% in the last week, down to $17 a share. And at one point, it was all the way up to $26 a share, which can be a very good swing trade. Now, I'm going to be personally treating this one like a swing trade, probably holding for 1 to 2 to 3 months. This one is pretty much tied to Bitcoin. So if you're not able to invest into Bitcoin or cryptocurrencies where you're at, this is a mining company for Bitcoin. So this company, Marathon Patent, they actually mine for Bitcoin. And they have a $1.6 billion market cap. Bitcoin miner stock hammered as crypto prices skid lower Wednesday. So that's why you do see falling. So that's why you do see the share price falling on this stock, is because it is tied closely to crypto, and we see crypto taking a spill right now. So I think that this is a great one to look into, or at least start researching on it. But I think personally this one can go as low as $13 or $14 a share. So if you're on the fence about this one, it's always good to just hold out a little bit longer, because it, as you can see, it has downward momentum right now. And $14 a share is probably pretty realistic for this one. Now, if you want to get into the EV sector, but you think that every stock is pretty much overpriced, I think HYLN, Hyliion, is actually a pretty fair price for where it's at right now. As you can see, it's towards its 52-week low, and it's at its bottom support right now. So this one can have a huge run-up in the next coming months, in my opinion. I have $400 worth, currently sitting at about a 5% gain, at an average cost of about $16 a share. Now you can see that this one just today is up 6.5%. So this is a stock that can be raising very rapidly, and you can take some quick swing trade gains on it too. And the market cap is $2.7 billion, so it's no small company, and the average volume is about 5.4 million. So a lot of people are actively trading it. And what I really like, it has a 52-week high of $58. Now, this one's a little bit more on the riskier side, so definitely proceed with caution and do your own due diligence on all of these stocks too. But at $17.70, it is currently making the list. Now, the next one up is going to be SFT. This is one I'm currently investing in too. You'll actually see I have $533 of market value at about $8.38 a share. So anytime this one goes under $8, I pretty much pick it up. And this is going to be a great long-term hold. As you see, they're down 23% in the last 3 months. And at one point, they even reached all the way down to $6.59. So you definitely want to be careful with this one. But I believe in the business model for long-term. And I think holding this one for about 1 to 2 years will definitely pay off. Their business model is kind of like a Carvana. So if you know, like those online car retailers, they will buy your car, sell you a new car. The market cap is only $698 billion. So it's very small still, but the company is very well ran. And if you look at Carvana, for example, remember they were even an $18 stock only 2 years ago, right? So that industry and that sector has a long way to run up. Their market cap is now $49 billion. So it's a very, very huge space. And for the company to only be at $500 billion in the stock market cap, and their share price to be all the way under $30 a share, I think is an early opportunity, especially if the company starts making some great moves in the next 1 to 2 years. even a 3-year hold would be beneficial for SFT in the long term, in my opinion. Okay, so the next one on the list, SWI, Solar Winds, is one that I am buying currently. You'll actually see I have $150 currently at about 4% gain, which is an average cost of $15.25 a share. Now, if we pull up the 1-year chart on this one, you'll see they had a big dip, about a 36% loss. So I was going to be taking advantage of that. And I knew that this was one I was going to want to take advantage of, because what happened is this is a very well-ran company, and it's a good company too. They just had a cyber breach, like a security breach, and a lot of people's information got leaked. And we can start seeing cyber breaches being a big thing in the future as computers get stronger. Hopefully companies will start keeping up stronger on their security systems and their cloud information too, all their sensitive details. So even with that 36% decline, they're still at a $5 billion market cap. So this is a great big company. And this is an IT security and an IT cloud services too. So it is bad that they got hacked. You know, this is not like a solar company like the name it might sound. So keep in mind they are a cyber company, a security company that did get hacked, which is why they fell 36%. I like to take advantage of dips like this, especially when it's a good company that I think can recover. So in my opinion, I'm going to be swing trading this one all the way up to about $20 a share. About a 30 to 40% gain. I'm actually going to be taking most of my position out of SWI. Now the next one on the list, TTCF, Tattooed Chef, is down 10% on the week is why it's making the list. Remember, it was almost even at $30 at one point at 26. So this is a great one to start thinking about adding to your list. I think that this one can pull down to about $22 a share. And if it gets below $20 a share, $19 a share, you definitely don't want to pass this one up for a long-term hold. This is going to be a 1 to 2 year hold, or even longer, like a 3-year hold or a 5-year hold, depending on how much gains you want from this and where your mindset is with this stock. Tattooed Chef, we won't talk too much about because we talked about it a lot of times on the channel. But basically, it's kind of like a Beyond Meat, but it's a lot smaller. The market cap's only $1.7 billion. And their main thing is obviously plant-based food, but their bottom resistance is all the way about $15 a share. I doubt it'll get that low, but if it goes to $17, $19, $20 a share, you definitely don't want to pass this one up. So it's a great one to have on the list at about $24 a share for a long-term hold. Now, DBX is the next one, and we won't talk about this one too much because we've talked about it so much on the channel in the past, but we'll just kind of give a brief update. It's getting back to that buy zone, about that $22 range. As you see, it ran up to about $24. We took most of our profits at that time. I think that this one, if it goes to $20 again, $19 a share, kind of like the Tattooed Chef, if it goes below 20 bucks, you're not going to want to pass up on it. This is a great swing trade. This one can easily go to $24 again. This one's a late bloomer, so it might take a little bit longer for it to pop. But once it does pop, it can even run past 24 because we've seen this one all the way up to about $40 a share at one point. So I think it will be at $40 a share again, but I think that'll probably take closer to 1 to 2 years for Dropbox. And the last one on the list is going to be Hims and Hers Health at $15 a share. This is a great SPAC. It used to be Oaktree Acquisition, but this one can be a great health for the healthcare sector, a great industry disruptor. And think of this one kind of like a Lemonade. And they really focus on that model of telecommunication health. So, for example, a lot of people don't like to go to the doctor nowadays. Younger people just want to do everything by the phone. So if you need your vitamins, or if you just need a few other different products, you've probably even seen this brand before. You've probably seen an ad for it. It's actually very popular. So if this is one that kind of interests you, I would read some articles about it. Hims and Her goes public in 1.6 SPAC deal 1 hour ago. Read some of these articles and see if it's something that you want to invest in. Now, this is one you definitely want to do your own due diligence in, but I would definitely end up on the list. It's $15 a share. It's new to the stock market. It has some huge industry disruptor growth on it, and it's part of the healthcare sector, so it diversifies this list a little bit more too. I think that this is going to be a great long-term hold and can even double its price in the next 2 to 3 years. It's one I would probably proceed with caution right now, invest very slowly, and keep a close eye on it for the next few months to see what happens with this stock. So you should definitely have it on your watch list. All right, guys, so that was the video. Let me know how you guys like these stocks where I'm just on my phone and it's a little bit different of a view too. They're a little bit more quicker, a little bit more to the point. So if you like these just as much as the other videos, or you don't really have a preference, maybe I'll do the in-person home studio videos like 2 times a week, and I'll do these videos like 3 times a week too. I do like to jump on in person a few times a week though, just so you guys can see me and I can say hey to you guys and we can look at each other one-on-one. So guys, if you appreciated this video and you really enjoyed it, and I know there's certain people that only buy the cheap stocks like under $30, so this video was for you. Make sure you share this video with anyone that is that way too, that doesn't like to invest into expensive stocks, or if you live outside of the US and you have to pay commissions or you can't buy fractional shares. Some people like the cheaper share price. And if you guys want to join my close friends list, remember I did start the wait list now. So DM me for more information about that, and we can go into detail on how we can start making you more money and you can make 2021 the best investing year yet. All right, guys, I'll see you in the next one. And remember, don't time the market, buy the market. Peace.